The NDXT Equal Weighted Technology Index, and that's companion to the XLK Cap Weighted Index for technology, has increased by 4 components. It was 38 and now it's 42. And it looks like Roper Technologies, Splunk, DoorDash, and either Workday or Intuit. I'm not sure which one exactly. Either way, that evens it out a little more, where NDXT was leaning towards semiconductors and chip manufacturers. They've now added DoorDash, and these other ones are cloud. So as such, I will not be looking at this publicly for a while. I will observe it to see what characteristics these 4 extra ones bring to it, and we'll just stick with the S&P 500 for a while. As it was a really good gauge, this NDXT, for the chip sector. When chips were doing good, NDXT was doing good. And when NDXT wasn't doing so well, you can know that either the Magnificent Seven, the other ones like Alphabet, Apple, Microsoft, etc., and some of the cloud and security components weren't doing all that well. So we're going to have to observe this for a while. And this S&P 500 daily chart shows the sell setup count 8 becoming lost and no chance of getting the end count 9 for sell setup on this price flip. So the combo and sequential buy setup 1 count is printed, and to negate that for end of day today, there must be a close above 4719.19 for the price flip back to the sell setup count 1. And price in the pre-market hours for the S&P 500 on the 21st at 6:41 a.m. Central Time is 47.23. And so if that keeps up for end of day today, we'll have the price flip back to the sell setup 1 count, but that really took the wind out of the sails of the updraft. Look at that bar, huge. So that's a warning shot across the bow that we're getting near the end of the year. Christmas is coming up on Monday, and people are headed out early, so they're going to take some vacation time around maybe today, Thursday, and Friday. And then that whole week in between that and the beginning of the year will be light traffic too in the markets and not so much on the roads and airports. So some people somewhere, I don't know if it's a lot of people somewhere in the world, are going to have a Merry Christmas because a lot of traders and investors have taken profits ahead of the holiday. So hopefully they spread goodwill and cheer, as they certainly did not do it here, but we'll have to see what happens. Today looks like a good day, but again, light volumes and not too many involved, but traders and investors just aren't going to let this market head down too far before coming in and buying the dip. And it's actually a welcome cool-off period, hopefully, as price has been exceeding this upper Stark band, which is set at the strictest level possible. And same thing with the Bollinger Band, upper band, set to really strict. So when that exceeds it and even punctures it a little bit, that's really stretching it. And sequential is on sell countdown 11 and combo sell countdown 12, and we won't lose that until we get a 9 buy setup end count. So that's way down here or wherever, and these will be negated. Until then, they're still valid, so we're still waiting for the 13s to print. And the ATM exhaustion alert for daily has printed, and that's usually an indication of sideways price action, but this was a pretty large bar down, so maybe we'll have a volatile trading range, a slight one going in between here for a while. If not, that's going to continue to the downside after this recovery, so I still believe it's going to be sideways action, but a little bit deeper and higher than I thought the range would be. And in this S&P 500 daily cloud chart, you can see the QQE fast had a little bit of pressure relief. It's pointed down, and it's not too often you're going to see the slow QQE above 70, so there could be a cross under above 70. So this is really a strong market and had a little bit of a hiccup here. So let's see what happens if it crosses under this slow. And the price high for yesterday almost nailed the relative retracement, disqualified up 3 for a high. And it's getting really close to the up magnet from October 13th, 2022, and that's the all-time intraday highs bar close. And the conversion line start the day today is at 4676.04, and the ARC 0.618 level 4633.09 baseline at that level, so it's protecting the 4600 line in the sand there. So if it slices through all that, it could slow it down to the 4600 area and then bounce. But I'm sure there's going to be buying before it actually hits the 4600 if and when it does. And the S&P 500 weekly chart, looking back to the COVID crash era, I will zoom into the current area now. And price has exceeded its up magnet level, so that's the close from the all-time intraday high bar. And if it stays like this below this close from last week for end of week this week, then next week we could have a chance to qualify it. If it exceeds this close for this week, then it still remains support. And an ATM exhaustion alert down was printed here recently, so now there's an exhaustion down alert in the daily and the weekly. And chart lines has printed the long-term overbought P alert down, and what that is telling us, even though DeMark in their infinite wisdom has taken away the contrary indication on the ATM pressure, so when pressure is up here, that's ATM pressure down at 102.00. And what this is telling us up here is that price is going to stay down, which means up on the pressure bar down here. So when it's up here, it's designated as pressure down. It's a contrarian indicator, so I don't expect much downside because of this indication here. And the DMI plus and minus are forming a pincher here, so they're getting a little bit closer together. The gap is still very wide between the two. And down at the ATM trigger, like I said, the pressure down is still pegged up at 102.00, and the ATM slow trigger is pointed down a little. Let's zoom in a little here. So the slow trigger is pointed down, coming off its lofty perch over here. Slow trigger 96.44. Fast trigger is headed down towards the overbought 75, so looks like it's going to go under that, so we'll keep an eye on the oversold line 25 to see if the fast can make it down there and the slow stays up above the overbought line 75, and ATM pressure down 102 stays there without having an indication of heading to the downside towards the up. And REI printed a duration region up here, so it was above overbought for more than 6 days. And so that headed down. It's almost at neutral zero. Let's see if it stops there and planes out at zero, or if it keeps going under zero and gets under oversold, -40, and DM1 can stay above this overbought region here. So it's been up there for quite a long time. ROC is threatening to go under the overbought region here. So that would be a problem if ROC made it under the overbought line 102.50 and REI went below neutral zero and headed towards the oversold line. Wouldn't be the end of the world. Then we observe ROC to make sure it doesn't go under its oversold 97.5 line, and then REI goes under oversold for 5 days or less, and then goes back above it within that time frame, 5 days or less, and that's another buy signal. And there's already an indication of a strong buy signal when the 50 simple moving average in gold went above the 100-day simple moving average in blue. And in this S&P 500 daily stock chart, you can see the blue 20 simple moving average is above the red 35 simple moving average. The 35 simple moving average is above the 50 simple moving average in green, and the 50 simple moving average is above this yellowish or gold 100-day simple moving average, and everything is above the 200 simple moving average in black. That's about as good as it can get. And there was a breach under this uptrend line in red, which for today is at 4713.18. And that former range top at 4719.45 got breached to the downside, so it needs to get above that uptrend line and that horizontal line there. And again, in the pre-market hours, it looks like it's going to do that. And if that holds, then that will be a good sign for things to come. And in this daily S&P 500 stock chart, you can see I have that huge rising wedge, and it has fallen back out of that again. And to get back above it for today, that would need to exceed 4735.65